Hello, everyone. Well, we're going to get this party started here. Welcome to our 7 myths and facts about the NFIP. I'll be your host today, and this shall be probably a short webinar. It's not extremely long. We talk about, again, some of the myths and facts, some of the misunderstandings that our insureds have had regarding the NFIP flood program. And if we have any questions, we have Terry Calvin on board with us today. She's handling our chat and going to launch a few poll questions as we go through. And I want to remind everyone this is for education and training purposes and sort of help to get you feeling a little more comfortable about talking about the flood program and talking to your insureds about it. As we go through some of these myths, please, by all means, if you do have any questions, let us know. We'll try to answer them as best we can. If we don't get to all of them, if we do happen to have a lot, we will, after the fact, make sure that we answer your questions and get them back to you so that everyone has all the same information. So with that said, Terry, would you like to go ahead and launch that first poll question?
Yes, I will. This first question is actually a two-part question. The first part says, what best describes your experience with flood insurance? And the options are novice, intermediate, or expert. And the second part is, are you an agent, office personnel, insured, or a competitor looking for intel? Those are your options. So please feel free to answer both of those, and I'll give you a few minutes.
Thank you, Terry. Yeah, this helps us kind of pinpoint who we're talking to in these webinars and give you some information that hopefully you can pass on, whatever means you have or whatever side of the desk you're sitting on, so to speak, to let you know I have been an agent in the state of Florida now for a little over 35, 40 years, and it's a tough call when you start talking about the flood program. It's one of those that everyone dreads to do, but it's incredibly important. So how are we doing, Terry?
Well, we've got, most people have answered so far, 84%. I can leave it up a little while if you like, but it seems to be holding steady at that.
We can go on. We'll get going here and see what kind of confusion we can put everyone in when we start talking about flood.
You want me to end it?
Yeah, go ahead.
Okay. There we go. You can see the results. We're fairly evenly split between novice and intermediate, and 65% are agents, and there's a lot of office personnel on there too. A few experts.
Great.
And an insured, actually.
Excellent. Okay. Well, we'll go ahead and take that down, and we really have only one objective to this webinar, and that is to focus on what's factual and what is a myth. So let's take a look at the first one here. And some of these sound like they are common sense, but in all reality, these are things that a lot of insureds and even a lot of agents really are confused on. The first one, of course, is homeowners insurance policies cover flooding. And as it says right there, unfortunately, many do not find out until it's too late that they do not have flood coverage when it's happened to them. And it's very scary when you stop and think how many more floods we are actually having across this country. Flooding is the #1 natural disaster in this country. Floods are the most common and costly natural disasters in the United States. If you think about it, we can have a standalone flood, or we can have a flood with a hurricane, a flood with a large rainstorm, a flood with an earthquake. We can have a double duty, floods out west after a fire. It is very common to have it more often than not. And those in those low-risk areas, they think they're immune because the bank doesn't require it. Unfortunately, a lot of our insureds and a lot of agents feel like if the bank's not covering it or not requiring it, then it must not be a big deal. And that is so wrong. There's a huge difference between not required and not needed. Not required just means that the property is in a low-risk area, low to moderate risk area. Being required doesn't mean that the mortgage company has a crystal ball and has some sort of insight that this is what's going to happen to them. So flood insurance is only available for homeowners. Absolutely not. Flood insurance is available to protect homes, condominiums, apartments, non-residential buildings, and commercial structures, as well as renters and personal property. Currently, the maximum amount of coverage on a building, on the dwelling form, is $250,000, with $250,000 also for that single-family home and for the multiple up to 1 to 4 units structure. Then you have up to $100,000 in contents coverage. Again, that could be a renter, or it could be the homeowner itself included in their building as a part of their building policy. Commercial structures can get up to $500,000 and $500,000 on contents. That also includes your non-residential structures. Another myth, only residents in high-risk flood zones need to insure their property. So untrue. Every structure is at a risk of flooding. If it rains where you are, you're at risk for flooding. More than 25% of all flooding occurs outside the high-risk zones. Great slide here. 25 to 30% of all risks of flooding risk claims originate in low to moderate risks. We see it all over the country. We have new building going on, and all of that is impactful to what is happening in that particular region. These properties are the ones that people think it's never going to happen to them. Most people forget that the expansion of new building development will create new flood areas. What may have been an empty lot 20 years ago is now where the water needs to go, and now there's structures there. Now there's a industrial park or a homeowner condominium apartment complex. That rain has to go somewhere. That water has to go somewhere. It's going to end up going, in most of the cases, to the older areas, because the newer structures are usually built up higher or more, so that water has to go somewhere and it's going to flow downward. Once these events begin to happen, properties in these areas may find themselves remapped into high-risk zones, and now they'll be required to carry a flood policy by their mortgage company. Having that PRP in place before this happens will deflect some of the initial cost. The cost includes elevation certificates, meaning after the fact, if they wait until they're required to carry it, the cost could include the elevation certificate, paying the higher zone, and possibly having to make structures or make changes on those structures themselves. All of that can be extremely costly to the insured. You can't buy flood insurance immediately before or during a flood, and actually you can. However, there's a 30-day waiting period. So those of you that are in areas, especially along the East Coast or the Gulf Coast, that know what it's like to not be able to write anything because a named storm is now in the box, you actually could be writing these flood policies. However, the insureds need to be aware that they're going to have a 30-day wait. So once it's already out there, it may very well be too late. So even if you're in an area that's not flood prone, it's advisable to have that flood policy. Anybody can be financially vulnerable to floods. People outside the high-risk areas file more than 25% of those claims. I can't say that enough. We do have two exceptions, however, when it comes to the 30-day wait. The first is the initial purchase of a flood insurance policy is made during the 1-year period following the adoption of a revised flood insurance rate map. In other words, somebody's been remapped into an area. Now they have within 1 year to purchase that flood policy, but they have a 1-day wait. Also, and this is the biggest one, the initial purchase of a flood policy is in connection with making, increasing, extending, or renewing of a loan. In those cases, there is no wait period or wait time. These are the ones that are coming into your office. I have a closing next week, or I have a closing in 2 weeks. I need a flood policy, and they want to quote. Remember, really remember this, that you don't have binding authority. You can give them a copy of the application and a paid receipt, but you don't want to give them or tell them you have actually bound their flood policy. There is no binding authority with the flood program. Okay, Terry, you want to put up our next poll question?
Absolutely. Our next poll is, what percent of flood losses come from low-risk areas? And you have the option of 0 to 5, 5 to 10, 10 to 20, or 25 to 30.
This is kind of a trick question because I've given you the answer at least 3 times. And just in case anyone just heard somebody snoring, my dog is snoring. I just heard her, and I hope that did not come through. I'm so sorry. How are we doing on that?
We're
poll?
Doing pretty well. We've got about 83% have voted so far, and I guess the rest are holding back. There we are at 85. We can go ahead and end that now. And you can see the results. Most people got that right. 25 to 30% of the flood losses come from low to moderate risk areas.
And bear in mind that this is the claims. These are the ones that have a flood policy and have submitted a claim. They are not the ones that have to file, for disaster assistance. So we'll talk about that in a little bit here. But these are ones that actually have a claim. Terry knows very well what this is like. Terry was actually in Harvey with Houston. And so many of those areas out there, people did not have a flood policy. They were in a low-risk zone. Okay, Terry, we'll go on to the next one here. Oop. Okay. Speaking of which, we've got the federal disaster assistance will pay for flood damage. Well, sort of. They will. The main form of federal assistance, though, is, first of all, the president has to declare an area a disaster area, and only the president can do that. That's only done at about 50% of the time. Secondly, a lot of things that people don't realize is that you do have to qualify for that help, that it is a loan, low interest loan, but it is still a loan. And once you have filed this claim and you've accepted the disaster assistance, before they will actually give you the money, you may very well have to buy a flood policy in place. So that flood policy would have to be put in place before they actually give you that disaster money. My tongue's tied today. So when you're talking to your insureds, yes, FEMA will probably pick up and be there, again, only if the president has declared a disaster area, which I'm going to reemphasize this, that's only done 50% of the time. But in order to actually apply for and get that disaster relief, they do have to do paperwork, they do have to submit it, they do have to qualify for that low interest loan. Not everybody does, and you would have to pay it back. The national average premium for an NFIP policy is about $825, which is less than the annual interest of most low interest disaster loans. Something to bear in mind. Terry, while I'm looking up here, I see a few questions. Do we want to go ahead and address those? Terry?
Well, I was talking with mute on. I was saying first, Joe said he wanted to know if you brought enough dogs to share with the whole group. So
yeah,
I think
my
you've only
Ava
had
would
the
love
one.
to.
So
we can pass her around.
Heidi asked, if you can't bind a policy, is there anything agents can use instead? And
yes, they can actually go ahead. Sorry, Terry.
No, that's all right. Go ahead.
You can actually use what is called a proof of purchase form that can be filled out. And as I said earlier, or you can use the deck page and a paid receipt.
And the next option or the next question from Deb was, when is a flood policy considered officially bound? You want to take that? You want me to?
Go ahead.
Okay. You have no binding authority at all. It's not essentially bound. The flood policy doesn't exist until it's issued. I mean, that's essentially it. And lenders are aware of that, so if they're not, then they haven't done much flood, and you may need to make them aware. But as soon as the policy is issued, then that's when it's considered in effect.
Great. Okay, we'll move on here to the next myth. The NFIP does not cover flooding that results from overflow of rivers, breached levees, or dams. I'm going to actually defer to two things here in a moment. As the screen says, the NFIP defines covering a flood as a general and temporary condition of rising waters from any source. So it doesn't have to be Mother Nature. It may be a broken water main. It may be a train derails and it hits a water tower. One of the things I want to read to you, if you get a copy of the summary of coverages, which we can put that the link on the chat here. But if you look at the older summary of coverages, it actually gives the definition of a flood right on it, which is a general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land area or 2 or more properties, at least one of which is your property or the insured's, from overflow of inland or tidal waters, unusual and rapid accumulation of runoff and surface waters from any source, collapse, subsidence of land along the shore of a lake or similar body of water as a result of erosion or undermining causes of waves or currents, water exceeding anticipated cyclical levels as a result of a flood as defined. The newer summary of coverages actually comes out and they tried to change it a little bit and make it, as they put it, what was I reading? More understandable. NFIP and FEMA's words. They are actually now defining it as your NFIP insurance policy covers direct physical loss caused by a flood. In simple terms, a flood is an excess of water on land that is normally dry, affecting 2 or more acres of land or 2 or more properties. For example, damage caused by a sewer backup is covered if the backup is a direct result from flooding. If the sewer backup is not caused by direct result of flooding, the damage is not covered. That's in the newest summary of coverages. So I truly suggest anybody out there that is just learning flood and they're trying to learn the basics, get a hold of a copy of the summary of coverages, have it at your desk, make a link to send it out in emails. It's a great way to answer some basic questions regarding flood if you need some quick answers, or to show the insured when you're talking about flood so that they get an idea of what they're actually about to purchase, and minimal questions. Again, it doesn't go into great depth, but it's great information to have on hand.
Sandy, I just put the summary of coverage in the chat, the link to it. I put the newer one of the one that's sort of for everything. And then the commercial one is the older version. They don't seem to have a newer version of that, but they're both in there now.
Excellent. Thank you so much. Okay, so our next myth is flood insurance can be purchased only directly through the NFIP. Yes, you can. Some agents do have a direct appointment with the NFIP and write directly through them. Mostly, though, agents are writing through what's called the WIO, or Write Your Own companies. These companies have been appointed and are set up with a processing group, so they are non-risk-bearing, on a non-risk-bearing basis through special arrangements with the Federal Insurance Administration. We have some other options now that we didn't have even a few years ago. There is private flood out there, which we don't really address in this webinar, but there are some companies who are now offering private flood. So there's some alternatives out there. So let's tie this all together here. The bottom line is, without this coverage, an insured has a large exposure, and you as an agent have an E&O exposure as well. One thing that we hear all the time from insureds or from agents who are who write a lot of flood, who are high producers, is that they ask every time. They talk to their insureds every time they're doing a renewal, a quote, new quote, anything, any reason that they can actually reach out to their insureds, because otherwise, from an E&O point of view, you could be missing a big point. There's a lot of agents out in Texas and the Houston area that didn't have that conversation with insureds. Same way in the Louisiana area with in New Orleans. A lot of agents didn't have that conversation because they were in an area that was mostly a low-risk zone. Whoops, went one too far here. So do we have any additional questions, Terry, that we want to address? Terry?
I was just in the process of answering this one. Catherine asked, is water from clogged street drainage only affects one home? And the answer to that is the definition says from any source. So yes, the fact that it was from that source would be covered. However, the water must inundate 2 or more acres of normally dry land area or 2 or more properties, at least one of which is the insured's property. And I kind of was typing that backwards when I got interrupted, but 2 or more acres of normally dry land area or 2 or more properties, at least one of which is the insured. Joe had a question that says that I sell primarily a private flood. It's a complicated marketplace and there are advantages and disadvantages, but every insured should explore their options.
Absolutely.
And I guess we would agree with that. Just be aware of the differences.
Anything else there, Terry?
Also, to add to the definition, Heidi pointed out that a property isn't only a home. So there has to be 2 properties, but the other property doesn't even have to have a building on it necessarily. It could be a vacant lot, could be the street in front of you. So 2 or more properties, at least one of which is the insured's property. So good
As
good
opposed
catch, Heidi.
to 2 or more buildings, absolutely. It's 2 or more properties. It could be the empty lot next door across the street, as long as it's from the same source. That's the key. 2 properties, same source. And Terry, I kind of missed it. I was going to ask you to share your story in reference to dams and levees being opened.
Oh, well, I think before we were talking about loss in progress, because a loss in progress is not covered on a flood policy. And the story was that I was working northern Louisiana and Mississippi one year after a big flood, and that area has a lot of what they call hunting camps. And for anybody that's not familiar with hunting camps, they usually start off as a little shack with a couple of bunk beds in it for the hunters to sleep, and then over time they add to it and add to it. But the key is that they don't usually insure them because they build them little by little with cash, and they don't have a mortgage on them, and it would be expensive, so they don't. So some little banks in the area saw an opportunity and sent out some letters encouraging people to borrow money on their hunting camps so they could get flood insurance with no wait, because they had opened the gates, or they were about to open the gates on the river and let the water out. So a lot of the agents were concerned as to whether FEMA would pay and stuff, and then FEMA finds out about it, and they send out letters reminding insurance companies that flood insurance does not pay for a loss in progress. And they considered that loss to have already happened the minute those floodgates were opened, even if the water had not reached the property yet. I mean, when they open those gates, they know exactly where that water is going to go. They know basically how far it's going to go, how high it's going to get. And if you're in the path of that, once that gate is open, that loss has already happened. So that's just an FYI.
Exactly. Again, it goes back to what we discussed earlier, that really the best preventative is to have that flood policy in place while it's still in that low risk zone, so that if a map changes or a situation like Heidi or Terry just mentioned occurs, they've got the coverage in place, because once it's already started and once it's already going, it's already too late. Heidi, I see we have a couple of other questions.
Yes, it's Deb asked, is the only real disadvantage regarding private flood is that the insured will lose continuous coverage if they had to return to the NFIP? And yes, certainly that is a real disadvantage. Because at this point, the NFIP does not consider private flood to be continuous coverage. So you could lose the advantages that gives you for grandfathering purposes, as well as retaining a pre-firm policy designation, if you know what that is. So Chad says, we have some remapping going on, mainly X to AE zones. How long does the insured have to get an elevation cert and get a new policy reflecting the new flood zone? Their next renewal? And the answer to that is, the lender's probably going to require it right away that they have flood. But the way it's handled for somebody, if they don't already have a policy, then they're going to really need to get that right away. There's some options in there for grandfathering and for the newly mapped option that would allow them to get a policy right away without an elevation certificate. So you'll want to consider those. And then
right, and they'll have 1 year and 1 day to purchase that policy and to stay in the be rated in the X zone. If they go past that 1 year and 1 day, then in order to rate it, they're going to need that elevation certificate.
And pointing out they also have to qualify for if they're going to do that preferred policy, they're going to have to qualify for that loss-wise. So if they currently have a policy in effect, they can stay at the X-zone rates or preferred rates if they have those, and then it will change to the newly mapped option at their next renewal.
Terry, if you want to go ahead and put
the
poll question up there, I want to also address that, and I think, Catherine, your question pertains to what Terry and I were just talking about there as far as the remapping goes. But the other thing I want to point out that Terry has put up here is the fact sheets. The fact sheets are a great place to find additional information. There's one on what are my coverages on flood policy. There's just a whole list of different ones that you can actually get a copy of. Your insureds can get copies of. Send them copies of it. But it takes each subject and it breaks it down pretty understandably. The other thing I want to point out on our resources page now here is, again, check out the National Flood Services website now. They list the webinars that we have. Please, by all means, come visit us again on some of these webinars. We try to take specific subjects. Great feedback. If you're looking for a subject, let us know. Let me know. Let Terry know. We'll try working on the subjects that might be of interest to a great number of people out there. Sign up to receive the communications from National Flood Services. We won't do any spam to you. We'll just let you know what's going on out there, any changes that are happening. There's our website, our email address for the agent development team, which is where Terry and I both are housed or homed, whichever way you want to look at it. And of course, you have the Flood Smart for both agents and insureds that has great information to help talk to your insureds about flood. And the bottom line here is talk to them. However you have to do it, talk to them. Because if you as the agents aren't giving them the correct information, they may not be getting any information at all. So with that, I'd like to thank everybody for joining us and hope you have a great rest of your day and come back and see us.
I just want to mention something in those fact sheets. You might want to look up the one on the newly mapped properties program. So if you have map changes going on in your area.
Great. Thank you.